Hey everyone, and welcome to this explainer. Today we're diving into the absolute whirlwind that was Soleno Therapeutics in early 2026. This is a story that moves incredibly fast. We are talking about a company going from a soaring, breakout commercial triumph straight into total corporate restructuring in a matter of months.
Seriously, think about this. How does a highly profitable biotech company literally vanish from the stock market in just 90 days? It's such a fascinating case study of how a massive commercial drug success can suddenly crash headfirst into legal turbulence, leading to a rapid cash acquisition. If you've ever wondered what actually happens behind the scenes when a biotech firm hits an absolute home run, but then immediately has to face the harsh realities of the public market, well, you're in the right place. That's exactly what we're going to unpack today.
Section 1. The VKXR Breakthrough. Now, to really understand this crazy pivot, we've got to understand the peak. Looking at their late February 2026 earnings release, their very first year as a commercial organization was an outstanding financial success. They had just launched an extended-release treatment called VYKAT XR. It was designed for a rare neurodevelopmental disorder called Prader-Willi syndrome. And the initial market reception, honestly, it was everything a biotech company dreams of.
And here's the number that'll drop your jaw: $91.7 million. In just the fourth quarter of 2025 alone, VKAT XR brought in a staggering $91.7 million in net revenue. To put that into perspective, this single quarter catapulted the entire company to full-year profitability. They netted nearly $21 million in positive income for the whole year. I mean, for a young commercial biotech company, hitting profitability straight out of the gate like that is a massive, game-changing milestone.
And the foundation of this massive revenue was built on phenomenal adoption metrics. By year-end, they already had 859 active patients on the drug. They had received 1,250 patient start forms. That alone captured over 12% of the U.S. addressable market in just 9 months. Plus, they achieved coverage for over 185 million lives across 630 unique prescribers. By all traditional metrics, SLNO was an absolute breakout star.
Section 2. Legal clouds gathering.
But as we know, success in the public markets rarely happens in a vacuum, right? Almost immediately after they announced this huge commercial triumph in late February, the company hit some major public friction. In late March of 2026, notices started circulating regarding a securities fraud class action lawsuit against Soleno. Legal firms were publicly seeking a lead plaintiff, and they set a firm deadline of May 5th, 2026.
So, observers and investors are suddenly staring at this wild split-screen reality. On one side, you've got this undeniably profitable drug with massive patient demand. But then, right there on the other side, you've got this emerging, unpredictable legal risk profile looming directly over the company's leadership. This created some incredibly sharp tension. The market had to somehow impartially weigh this incredible commercial potential against sudden, very real legal vulnerability.
Section 3. The Neocrine Acquisition. Well, that tension? It snapped. Very abruptly in early April 2026, Soleno agreed to be acquired by Neocrine Biosciences for $53 a share in cash. This buyout triggered a massive, immediate wave of analyst downgrades. Price targets from major firms like Wells Fargo and H.C. Wainwright, targets that were once sitting well over $100, were instantly slashed to exactly $53 to match the cash buyout price.
The market sentiment shifted perfectly to fall right in line with the reality of this merger. Ratings dropped from buy and strong buy down to hold practically overnight across the board. It was a crystal clear signal to the market. Soleno's independent journey on the stock exchange was officially coming to an end. That whole debate over its future potential versus its legal risks effectively closed by a definitive cash price.
Section 4. Delisting and final outcomes.
Okay, let's look at the actual nuts and bolts of how a public company closes its doors and cashes out. We can use SEC Form 4 insider trading filings as our guide here. On May 18th, the merger was finalized and all equity was automatically mechanically cashed out. So, Step 1, common stock converted straight to $53 cash. Step 2, restricted stock units, whether they were vested or unvested, also converted straight to $53 cash. And Step 3, stock options were canceled and paid out based on the difference between their original strike price and that $53 merger price.
You can see this playing out perfectly when you look at Soleno director Andrew Sinclair's portfolio. Before the merger, he held over 10,000 common shares and multiple tranches of stock options. The exact moment the merger executed on May 18th, those holdings were instantly zeroed out. Now, the shares didn't just disappear into thin air, of course. They were mechanically transferred back to the issuer in exchange for the cash buyout.
The sheer speed of these events is honestly breathtaking. Just look at this timeline for May 2026. On May 5th, the lead plaintiff deadline for the securities lawsuit passes. Less than 2 weeks later, on May 18th, the merger completes and the insider equity is entirely cashed out. And then, a mere 10 days after that, on May 28th, they file Form 1512G that officially terminated their SEC registration and delisted the company. The whole shebang was wrapped up completely in under a month.
So all of this leaves us with a really fascinating final question to chew on. When a company like Soleno proves the incredible, undeniable value of a drug like VK aka XR, only to be snapped up by a larger player in the midst of legal pressure, is an early cash buyout the ultimate goal for biotech innovators? Or is it just the beginning of a breakthrough drug's journey under a new roof?